We're going to talk about paying your student loans back. Welcome to part 2 of Student Loans 101. If you missed part 1, definitely go watch that, especially if you are in college at the moment or going into college. I highly suggest you watch that before you take any loans out, or if you just want general information on student loans. For this one, we're going to talk about the different payment options, how you know when to pay things back, and how to choose the best payment plan for you. I'm also going to expand a little bit more on interest, give you some of my own numbers so you can put things into perspective in regards to your numbers. So let's jump right into it. So if you are in college right now, you do not have to make student loan payments. And we're gonna focus on federal student loans here. Private loans, go back to my first video and watch that if you want to learn more about the different loans to choose from. But I don't recommend private loans, so we are not going to focus on that. So we are focusing on federal loans here. And you do not have to pay those back while you are in college, which is good. However, if you remember from before, those unsubsidized loans are accruing interest while you're still in school. The subsidized loans are not accruing interest while you are in school, but about 6 months after you graduate is when they do start to accrue interest. And that is the point where you also have to start making student loan payments. This does not mean that you can't start making payments right now while you are in college, or that you can't start making payments before that 6-month mark. They do give you a little bit of a grace period so that, people can find a job. But for a lot of people, 6 months may not be enough time. I know for me, I was still working just an hourly wage job, and I didn't actually start my career until almost a year and a half after graduating. So you will have to start paying about 6 months after graduation, unless you go into grad school or go back into school, or if you defer on your loans, which we will talk about that in a moment. And you will know because you will likely receive an email. And so you'll receive an email saying to create an account on whoever your loan servicer is. So this is whoever is holding your loan right now. For example, my loan is with Navient. All of my loans are with them. Chances are you probably have multiple loans under one company. If you don't want to wait until that point, you do have the option to look up how much you owe at the moment. If you visit the Federal Student Aid website, which I will link down below, and you will be able to find information about your loans. You can find how many loans, how much, the interest rate, and who your loan servicer is. And at that point, you could create an account with your loan servicer, loan provider, or you could wait until that 6-month mark to start paying it back. That is how you would find it before that email comes. I do think it's important for you to be aware of how much debt you actually have even before you graduate, so you can kind of not be shocked once that number comes to you, because for a lot of people, it can be really overwhelming. So this can also help you to prevent yourself from going into further debt or too much debt in your next few semesters if you still have some time to go. So definitely be aware of where you stand all throughout college. I did not do that, and by the end of it, I was at $50K. Now at that 6-month point, you are going to have a few different options for payment plans. We're first gonna get deferment and forbearance out of the way, because first of all, I'm not going to recommend that you defer or forbear on your student loans. This basically just means that you pause your student loan payments. And typically people do this because they feel that they cannot make their student loan payment. Maybe it's too high for them, they're not able to afford that minimum payment, or something tragic happened where they absolutely cannot make that payment. And if you can, I suggest you really try to avoid this. The reason being is that it's just going to push your payment time even longer, because unsubsidized loans are still going to accrue interest during this time, and the subsidized loans are not, but it's still pushing back your payment date, and it's going to increase what you're going to pay in the long run, and probably your minimum payment in the long run. There are many options if you consider yourself low income and you are struggling to make your payments. But if you're watching this video, I hope that you are really serious about paying off your student loans, and I hope you recognize that these limits that they put on student loans and how long it's going to take you do not have to apply to you. So you do not have to take 10 years or 25 years to pay off your student loans, you can do this a lot quicker. I suggest that if you do have a lot of student loan debt or student loan debt at all, then you should probably check out Dave Ramsey, because I don't believe everything Dave Ramsey says. I don't follow all of his rules, but his content is so good if you are in debt, and you can learn so much from him, and you will also get really inspired to pay off your debt quicker than what the government suggests. And this will save you money in the long run. This will also be better for you mentally. And if you just really shift your perspective, then you can get this done way quicker and get a hold of your spending, and you're going to create a better future for yourself in general. So again, deferment would mean that you pause your loans. The interest would still accrue depending on which type of loans you have. Do not recommend it. So that's my word on it. But let's go on to the different payment options. The first one is pay as you earn. This one is income based, meaning that your minimum payment is capped at 10% of your discretionary income. I believe this is also a plan that you would typically go on if you are doing public service loan forgiveness, which we will talk about in just a moment. But this is also one that will typically have a lower minimum payment. And then after 20 years of payment, which is a really long time, they will forgive whatever is left on your student loan. Now, there's a similar payment plan, the revised pay as you earn plan. And this is based off the same thing, so income driven repayment. So again, they cap your monthly payment at 10% of your discretionary income. They would forgive your loan after 20 to 25 years of you paying on it, a really long time to be paying on loans. Now, to be honest, I don't really understand too much about those plans. And so I did a little bit of research on them, and that is what I found out about them. So if that is something that you qualify and you consider a good deal, then go for it. Your monthly payment will typically be smaller. You're going to be in debt for a really long time. But also keep in mind that if you have a minimum payment, you do not only have to make that minimum payment. So like I said, watch Dave Ramsey, watch my videos. We're trying to get out of debt way faster than the 10 years that my plan is. And you can do this a lot quicker than 20 to 25 years. You're going to pay way more if you do that. And if you just get really intentional about your money, you can shorten that time to under 10 years. The next payment plan is the graduated repayment plan, and this is the one that I started with. This is a 10-year payoff plan, and your payments start lower and they increase every 2 years. So when I started this, my minimum payment was $289. By the second year, I would have been paying $379, and it basically doubled every 2 years. And by the 8th year, 9th year, 10th year, whatever, my minimum payment would be over $800. However, as you all know, I am planning to pay this off well before that 10-year mark, so that really wouldn't have happened, but that's a pretty significant increase if you do take the full 10 years. So to go from 200 something to over $800 a month in a minimum payment is absurd. So again, I would suggest putting more to your student loan debt so you don't have to take that 10-year time. Similar to that is the extended graduated repayment plan, and this goes from 10 years and takes it up to 25 years. So it's the same idea. You're going to start with a much lower minimum payment, and then after every 2 years they raise it, or I can't remember if it's every 5 years or something, but they increase it every few years, and by the end of it you're paying a little bit more. This one would take you 25 years. I did start on the graduated repayment plan, and I was on that for 2 years, but I recently switched to the extended repayment plan, not because I cannot afford the payment, but because I wanted to lower my monthly payment so that when I put extra to my student loan debt, I can put it toward the highest interest loan specifically. So that is one way to pay off your student loans a little bit faster, as long as you don't take that full 25 years, of course. And if you do take that long of a time, you're gonna pay way more in interest, way more, like $20,000, $30,000 difference in paying interest. So I do not recommend these extended plans. The shorter your payment plan, the faster, obviously, and less money you're going to pay. Another thing about the graduated extended payment plan is that you have to have over $30,000 of student loan debt to qualify for that one. So each of these have requirements, so you may not qualify for every single type of payment plan. There are a couple of other options that I did not want to include in this video just because they're not chosen as frequently. These are the main ones, and so whichever you qualify for and whichever you can afford, I suggest that one, and then pay off a little bit more each month if you can. And pay attention to your term length, how long you would be paying on the loan, the interest rate, how much you would be paying in interest from one payment plan to another, and then of course the minimum payment. I did want to touch on public service loan forgiveness because it's out there, you know, and I just want you to be cautious. If this is something that you are planning on doing, I do not recommend it, to be honest. If you do your research and you know the statistics out there of the number of people who have applied for this loan forgiveness and the number of people who have gotten approved, it is absurd. The thing about this type of plan is these people do not care about you. So you may think you're qualified for this and you may apply for this and everything's all good, but they may not tell you one little thing that you messed up or need to do in order to qualify for this. And so if you're making those required payments for 10 years and then at that 10-year mark you do not qualify for it, like so many people have experienced, it's been like I think 99.5% of the people who applied for public service loan forgiveness did not get approved, then obviously you're going to be really upset and you're going to be more screwed than when you started. If you think you're doing everything right and you are just trusting the process, then go for it. But seriously, I recommend doing your research and avoiding this if you can. You can make these payments. You can do this. And I wanted to make this video to also encourage people to shorten the amount of time that they pay off their student loans and to take responsibility for the loans that you did take out. I understand that something like loan forgiveness sounds really nice, but you're probably just gonna save more money anyway if you shorten your payment down into 6 years or 5 years or even less than that, depending on how much you took out. But if you're going to be paying for 10 years anyway, why not just try to pay that off sooner on your own terms and make decisions in your life that are going to support you financially? Like I said, I wanted to touch on interest a little bit more in this video. So when you first start making your student loan payments, most of that payment is going to go to interest. The first few payments will go to your interest. To give you an example, my first student loan payment, I paid $289, I believe it was, and 97 cents of that went to principal. The rest was interest. And then the next time, a little bit more went to principal and the rest was interest. And then the third time, same thing. So at first, you're gonna notice that a lot of your payment is just interest, which is sad, and it's not really going to make a dent. You're going to be paying thousands a year to your student loans and it's barely going to budge. And it can be really discouraging, but this is exactly why we want to pay it off quicker. When I first started paying my student loans, I believe my interest per month was about, after those first initial payments, I believe it went down to about $180 per month in interest, which is still a lot. And now that I've paid off almost $20,000 of my student loans, my interest is still at about $117, $118 per month. So before I was paying like $6 a day in interest. So just bear in mind that your student loan is gaining interest every single day. So it's as if you are purchasing something every day for $6. Every day of the month, every day of the year. And of course, the more you pay off, the less you're going to pay in interest. So now my daily interest is like $3.50. So it's like as if I'm paying $3.50 to buy something, but it's just interest. It's nothing. This is exactly why I paid off my higher interest debts first of my student loans. So I used to have 11 student loans and now I'm down to 7. My student loan interest is between 3.15 and before I had the highest was I think like 6.5 7 or something like that. So I paid off those 6%, 5%, and high 4% first. Those are all paid off. And now I have like a 4.1 and the rest are below 4, which of course is going to save me in interest. So this is what I meant by choosing the extended graduated repayment plan. I'm able to still cover all of my minimum payments for all 7 loans, and then I can put extra money to the highest interest loan. This is something that you have an option to do on your loan service provider's website, and you will have to figure that out depending on which one you have. But you can direct it to a specific loan as long as you're still paying the minimum payment on your other loans. So if you can make an extra payment each month, or even if it's just like $20 that you got an extra $20 today, make that payment today because the interest is accruing daily. So every bit that you pay, no matter what day of the month it is going to help you. So don't wait the month if you don't have to. Like, pay as many payments as you can. There's also a tax deduction that comes along with the interest that you pay on your student loans. You can deduct up to $2,500 of your interest. But to be honest, when your income increases past a certain point, then this really doesn't make a difference. I know initially it did, like when my income was really low, it helped me out a bit. I got a bit of a bigger tax refund, but now it doesn't really make a dent. And every year so far that I've been paying on my student loans, I have reached that deduction minimum, the $2,500. So you will be paying a lot in interest each year, depending on how much you owe. But just keep that in mind. It's there, it exists, it's growing every single day. I hope this video was informative. If you have any questions about student loans, or if you are interested in me making another student loan video, I don't know if there are any questions that you have further than this, or if you want me to expand on anything further, please let me know, comment that down below, or feel free to email me. I really want to help students to avoid debt or just get out of debt quickly and stop falling for these traps, because they truly are a trap. And if you can avoid these student loans, please do. If you can pay them off faster, please do. Be smart about what you are choosing to do with these student loans, and we will pay them off. I know for me, I don't want to be a part of this $1.6 trillion statistic anymore of the student loan debt in America. I want to have $0 in student loan debt. So if you are on that same journey, let me know down below. Tell me how much debt you have, how much progress you made, whatever you want to comment. And don't forget to give this video a thumbs up, subscribe if you haven't already, and I will see you in my next video.